What's going on, everybody? If you guys just tuned into this channel for the first time, I'm Krulsawat with Simply Vegas, Realtor out here in Las Vegas, Nevada. So today we are actually gonna go out and preview a property for a client out in Red Rock Country Club out here in the SUMMERLIN area. I'm gonna show you guys the surrounding areas, kind of get a general idea of what this community has to offer. All right, so let's get out of here. Thank you. All right, you ready to get out of here? Let's get the hell out of here. It's getting too hot.
You went from working at a casino
And getting fired at every single job.
and somewhere along the line something sparked you that made you think, I want to sell homes.
Well, at the end of the day, I was always an entrepreneur myself anyway, so I always had that mindset. Couldn't really, work for anybody, but I had to find something where I can do my own scheduling and my income is based upon my outcome. And I think that's what the difference is. But now it's just a game, This is something I enjoy to do. It's not like one of those 8 to 5s, like, oh, I gotta go to work. This, I actually enjoy it. So at the end of the day, I got into real estate because it is a true wealth. So if you take a look at any entrepreneur out there, within their portfolio, they actually do have real estate. So we're actually heading down here to the west of the 215, and it's about 11:40 right now. I'm trying to give you a general idea what traffic looks like. I got a feeling this is not gonna allow me to the back gate. Yep, I took the wrong turn. I should have just went with my gut instinct. So what happens if you follow GPS? So basically when you preview a property for a client, I already know what my clients are looking for. Normally this is for out-of-state buyers, and basically what's going to happen is we're actually meeting the broker out there, the listing agent for this property. So I'm going to go out there, preview it for them, and possibly do a FaceTime, and they are interested. And at that point, then what we'll do is probably submit an offer contingent upon interior inspection. And those are a couple things that we do if you're an out-of-state buyer. I'm heading over to 3097 Turtle Head Peak Drive.
Your name and company?
Chakits with Simply Vegas.
Have a good day, sir.
Thanks, man. I appreciate it. You too. Am I supposed to hang these on the window? Look at this. A gated community within a guard gated community. Oh, that's what I'm gonna do.
Let him go.
Let him go. Like, oh, that'd be crazy if it closes right in back of them.
Oh.
It's like, thank you. How the hell? So, some of these agents won't allow us to film inside their property, and it really depends on the client. But this one right here, the agent, he was actually the owner of that home, and sometimes they have personal items in there that they just don't want to be filmed, and they don't want 73,000 people looking at their home, and I understand that. So that's why it's like, in the comments that I always get, hey Chuck, why don't you show us like $4 or $5 million homes? Well, I can't really always show you guys those type of homes. However, if you guys are actually into those type of homes, if you guys actually go to my Instagram account, I do take pictures because they do allow us to take pictures, and I have a lot of great pictures on there, especially if you are an interior designer. However, every once in a while, I will be able to get into the $3 or $4 million homes. And the next one that we're going to be shooting is a listing from Simply Vegas, and this is a true mid-century modern, and I think that one's going to take place on April 9th, so stay tuned for that, and we are going to do a full video tour on that property.
I don't know if I like to really go up to that high.
Well, I understand that, but I only can show you what's available.
right.
And basically,
Just trying to look.
I'm constantly looking, Doctor,
Yeah.
Mr. Kim. I'm constantly looking.
Very good, very good. And so one that I gave you the address, are you familiar with that? Because he wasn't in the market for a while.
Yeah. The problem is that property that you're looking at 85 Pristine, I think it's called. The problem with that one is there's really no view. You'll have a view from the second floor, but if you look in the back, they're actually building like 3-story townhomes for retirees. And I don't know if you. Go ahead.
No good.
Go ahead.
No good. So
Yeah.
I want you to find me a hidden gem, hidden jewel.
Which is I can.
So find me one. I know you can.
But Mr. Kim,
So look.
can we go up on price a little bit? I need your help.
Oh man, I already brought it up. I think that come on. You know why?
Yeah.
I'm gonna share with you.
Yeah.
I'm thinking of buying another commercial property in Vegas.
I understand.
Like a strip mall.
Yeah.
So I don't want to put everything to the residential.
Gotcha.
That's the whole purpose. I mean, right now I'm still have a primary home in Seattle.
Yeah, I understand.
Even up to 2 million. I mean, I think that's a plenty enough that I could find something what I like.
All we can do.
It's your job.
I got you. All we can do is sit and wait. Let me see what's out there. But however, when we spoke to the missus, she said single story. You're saying double story. If you can consider double story and she's okay with the master bedroom downstairs, then at that point,
there you go.
It opens up the option a little bit more.
As long as like that, I'm fine.
Okay. All right. Let me get to work. Let me see what's out there. Okay.
Then I have the bedroom thing downstairs. Master will be much better. I'm looking at it too. All right.
All right. Sounds good. All right. Bye. Dan works, Mutual of Omaha. Dan French is a lender out here, so we're gonna go out and meet up with Dan. Kind of ask him some real estate questions, actually financing questions. See what programs they actually have out there right now. Yeah, we're gonna take this one. Thanks, man. All right. 100. Oh, get it. Oos! Good job. I didn't read it. Was it 3?
I didn't see it.
4. We're gonna get
3 and 4.
Was it really?
It just hit 3 and 4.
Oh, too late now. Okay, 3. Back up, wrong one.
3 it is.
0. Try this again. Okay. Back up, it's number 2.
Number 2?
Yep, number 2.
Dad's been like, where the hell are these guys at? We hit everything today. We went for a roadblock. Let's see what else we hit. Wrong turn. Wrong floor.
No. Wrong floor.
What's next?
Oops. My bad. Alright. 4th floor. Oh, here we go. Mutual of Omaha. What's up, Ted? Hello, thank you very much.
Gonna beat you, Dan?
Good. I just want to ask you about this upgrade that you guys have for this.
Alright, so guys, we're actually here with Dan. French with Mutual of Omaha, and we came up here today because we want to talk about financing and actually how the process actually works, especially if you are a buyer actually out of state and you're trying to transition out here. There's certain things that you really need to know. You can't just come out here and start buying a home and getting financing. One of the things that I always talk about, especially if you're out of state, you want to speak to a lender before you actually come out here. Also, one of the things I've noticed is a benefit if you work with a lender out here, that lender understands the processing as far as purchasing a home versus using an out-of-state buyer. So let me introduce you Dan French.
What's going on, guys? How you doing? Been a loan officer for about 11 years. I've been all facets of the business. I've done business development. I've done loan assistant, and now obviously I'm doing loan officer work as well. I've been through quite a few companies and seen different roles of what companies do, and really it's helped me try to understand exactly what's important and what's not to the consumer or the client out there trying to buy a home. Mutual of Omaha Mortgage is a little different. They offer a lot more hands-on work or help with anybody going through the loan process. It's really, you start off with me as everybody would, and we get through the process of just finding out if you're approved. And then the next thing we look at is your paperwork. Once you get an approval letter and you're out with Chuck, then it kind of starts from there.
So let's start from the beginning. So I get a call, somebody's actually interested in purchasing a home, and one of the first things I tell them, hey, let's speak to a lender. So
Right.
Once they contact you, what is that process from there? How does that work?
Well, I think a lot of people, especially millennials, they don't really want to engage or meet in person. There's a lot that do, but a lot of people want to just get it done, get it quick. So there's a phone app or there's an application online that a lot of people, they go that route. And that route is typically the easiest way because then it submits right into me. We obviously go through questions over the phone. We look at the credit. We look at, do you have down payment, closing costs, things like that. We also look at what your employment is, what your history is there. And then we look at what, like he was talking about, what state you're in. If you're working out of California and you're trying to buy a primary residence here, it's not going to work for the most part. It'll work under certain circumstances, but that's a case by case. And that's really where you really iron out those kinks in the beginning.
So what are the things that you actually look at? So once they fill out the application, you mentioned credit score, that plays a big role, all right? And also the debt to income ratio. Can you explain that a little bit?
Well, debt ratio is more, it's not for VA. VA is more on residual. I mean, we can, in some cases, I get debt ratio up to 69% on a VA loan. Debt ratio is important because it's a compensating factor of a lot of layers to getting approved for a loan. But that debt ratio is really, there's a certain point where you can't go past that because a bank feels like you're too much risk. I've seen on FHA loans go up as high as 55% debt ratio. That's your total debt versus what your income level is. And they're projecting that with the new mortgage payment that you're going to be getting.
So certain companies will take you to a higher threshold. Is that correct with the debt to income ratio?
Well, it's not companies, it's banks. So if you're a correspondent bank or you have banking options, there's different bank options that you can go with. Most of the time, though, it's usually pretty vanilla when it comes to like FHA or VA. Or not VA, excuse me, FHA or conventional loans. But when you look at the overall picture, there's always options outside of just the normal structure of doing loans for other banking institutions. They have portfolio lenders that are willing to go outside the box and maybe try to get you approved in other ways based upon, okay, you don't have one strong area, but let's say you're getting, like, for instance, you're getting large deposits coming in as a self-employed borrower, then maybe we can use, bank statement programs or something like that. So there's options for both. There's the vanilla type client that's obviously somebody that comes in, but then there's also people out there that maybe don't have a credit score. They need to generate a credit score, right? Or they don't have the money showing on their tax returns and they're writing that income off. So now we go to bank statement programs, things like that. That's really to try to help everybody out there trying to get a house. Now sometimes you just can't approve, but the good thing is I'm going to put you in a place and we're going to work together to put you in a place to understand where the problem's at, and then we're going to find a solution for it.
Now let's talk about the credit score. How does the credit score work, and how does that affect your interest rate?
Well, it directly impacts your rate, and there's loan level pricing adjustments for every lender out there. Most clients don't know that. They don't understand how a banking institution makes money off that, and it's all about risk and profit. The more risk you are, the more profit the bank's going to make off you. So if you're at a 500 score, we could still get you approved, but guess what? Your rate's going to be not really good. It might be a full point higher than the going rate. You're putting down 10%, sometimes more on the down payment. So yeah, you can potentially get into a loan that way, and you might find a banking institution that does that, but you're still under a strong position of maybe, coming out with more than you thought, more down payment. You might have to have a lower debt ratio. It might be under 40%. We talked about going as high as 55. That threshold might be lower because you're just not as qualified as other borrowers.
Now, when you're sitting down with a client and you get them approved, how do you actually find a right program for that client?
Well, you start with what the client asks. I mean, you have to find out what the client's goals are. How much can you afford? What is your current mortgage or your rents now if you're renting? Are you comfortable with going higher, $500 in payment? So you really start off with the client. You got to find out what their threshold is. Then you find out what they have available, and then what are they willing to go with? What are they willing to work with? So I think that's important. It really comes from the client, though. It doesn't come from me.
Gotcha. And there's some lenders that I work with. Sometimes we get a pre-qual approval, pre-approval, conditional approval, and underwritten approval. Some banks will give you underwritten approvals. Some won't. Do you actually take that file over to the underwriter? And if so, why do lenders actually do that?
Well, I think some lenders need to do that more often. I think it takes a lot. You have to have the capacity, and you also have to have the opportunity for underwriting to be available. Some places just can't afford it. To hire another underwriter, have underwriting up front, and then also have underwriting on the back end as well. It takes a lot of money to do that. And so, fortunately, Mutual of Omaha Mortgage, we have a deep pockets because we have an insurance company. We now have a mortgage division. Yeah. And so what's good about that is that now we have the ability to have underwriting up front. They will check and really do a thorough check on everything that goes on with the client. They're going to check not really the property, but just can you afford this loan? They're going to be checking and really signing off on the income that's showing. They're going to be looking at your credit report, making sure there's no blemishes. They can do a background check on it if you owned any properties, if you had any liens or anything against you that we don't know about. Guys, I'll tell you, there's a lot of times where people get into a loan and then we find out through a background check on properties that they currently owned or had owned, they went to foreclosure. That changes the whole dynamic of the loan.
Is there any way to prevent those kind of things before going out and shopping for a home and putting earnest money deposit down, spending the money on the appraisal and the home inspection?
This is the way. I mean, this is the absolute way, because as a loan officer, you don't have all those opportunities where you can go and check the background on, let's say, you can pull a Mavent report and things like that to kind of see what's going on. But a lot of times, underwriting does more of a thorough job than just the loan officer. The loan officer is really there to check to see if you meet the bare necessities of really qualifying for a loan. You try to do the best you can. You look at the credit. But there's stuff sometimes that clients just don't put into the loan. They don't tell you about it. And so underwriting is going to find that out every time. So yes, it's going to protect the consumer, but as a consumer out there, you should also be telling the right things up front to protect yourself anyways. Like, you shouldn't have to wait for an underwriter to find that stuff out, and then all of a sudden you're scrambling at the end. If you had a foreclosure, you had a BK or a bankruptcy, or something happened where, on your credit or just anything, you should at least advise or at least let the loan officer know.
So the more you disclose, it is better for you, because you don't want to go through the whole process of a transaction. Next thing you know it, you got all this money down and you can't close the deal and you lose everything. That's not the position to be in. Now let me ask you this. Let's go back to the beginning.
Yeah.
Now, once they get fully approved, you get the approval letter, they go out with me and they find the home. We lock it up, we tie it up in escrow. We send over the file to you. What is the process from there? What happens next?
You're talking about after in contract.
Yeah, once we're in the contract, I send you over the email, escrow is open. Now, between you and the buyer, what's the next process for the buyer?
So the next step is that I'm going to go through and we're going to detail the file, see if anything's changed. We're going to ask for updated paperwork, updated bank statement, updated pay stub if you're a W-2 employee. Anything that's going to help us really get up to speed about, let's say you were looking for 2 or 3 months, we need to get that updated paperwork to get going. You're going to get a set of initial disclosures after everything's done. We're going to get a contract. We're going to put all the fees in. You're going to get a loan estimate. You're really going to see everything that's coming out as far as what the loan is what you're entitled to be paying, also what's involved. Secondly, you're going to get another email after that about paying for an appraisal. So you always, for the most part, you want to pay for the home inspection first, because obviously you don't want to pay for an appraisal. Yeah. You do that, and all of a sudden you're paying for a home inspection. We don't know what the appraisal amount is. All of a sudden you're out that money. So the next step is getting an appraisal done. And then the dynamic of what Mutual of Omaha Mortgage has here is they have what's called a setup. So there's a lot of people with their hands in the pot here who's trying to get you going, getting you into underwriting. You have a setup up front, so they're going to be like getting out the appraisal. They're going to be setting up all the stuff with title. Then you have a front processor who's going to actually call you and work directly on your file as far as paperwork, things that they see that may be missing. They're going to detail the file. And then you have a back processor as well, which works directly with underwriting. They're going to submit your file to underwriting, and then they're going to be the basis of communicating through the underwriting process. I'm going to tell you guys, this is the best system. I've been moving from companies recently, and just because I'm trying to find a good blend of rates and also a blend of operations. And right now, this is the best system that I've seen for really anybody out there as far as a banking institution. We also, like I said, having that underwriting up front, before you're in contract, we're already getting an approval from some underwriter that we've submitted to. We have a few underwriters here. So it's very important that you guys understand that we're really in it to protect you as a consumer, but you also have to protect yourself. Like we talked about, you have to disclose things that's on there that some people think, it's not a big deal. It might be a big deal. You might need to disclose those things.
So let's talk about the appraisal process. Before that appraisal is to be ordered,
Right.
Obviously they have to turn in paperwork to you to
Right.
go through the processing department for the processing department to order the appraisal. Is that correct?
That is correct.
So what I'm trying to get here is that timeline. Time is of the essence. In a resale out here in Las Vegas, Nevada, you have 35 days to close a deal. So once escrow has been open, your lender has a file, it's very important that you turn in all the paperwork that your lender needs right away. Just to get the appraisal, if you don't turn in certain type of paperwork, then you're just losing days to close this deal. And at the end of the day, it is going to hurt you. Now, going back to the appraisal part, obviously there is a fee, and that's a fee that's actually up front. Am I correct? And what normally is that fee?
Well, VA loans are not upfront. VA loans,
Okay.
you can actually charge them at the end.
Okay.
It varies different on different appraisers on what they charge. We have an appraisal management company that has a rotation of appraisers, and it's just in rotation, guys. It's whoever's next on the list, and there's about 6 of them.
Gotcha.
So whoever gets the next assignment, then they're going to determine exactly how much that charge is going
Now,
to be.
depending on the type of loan that consumer has, when it comes to the appraisal, when the appraiser goes out there, what do they appraise the property on? I know it's the price and also on the condition.
Well, they look at utilization mostly. The biggest thing is, do they have properties in a mile radius that's similar in square footage with similar structure? You can't just randomly come off with some properties that don't match. You know what I mean?
And have you ran across that where it's
Absolutely.
$30,000, $40,000, way below value? Have you
Yes.
had that problem with agents?
Yes, because they're not. Well, here's the thing: agents don't comp properties very well, and I'll tell you, it's because they really don't look at. They think it's there's a property that's for sale. It's not for sale. It's what's been sold. Okay, and what's sold recently. Now everybody's like, well, I got one up at $400,000 and the purchase contract's $350,000. Guys, that hasn't been sold and it's been sitting on the market for 90 days.
Yeah.
It's just obviously you have to go off of good comparables on every property that you have. And I'm going to tell you, more often than not, if you're not a seasoned agent or you're somebody that's just throwing a deal together, you're pulling that deal back because now you're out looking for another home because the value is just so different. I've had one that's come in less $20,000.
And at that price point, sometimes the sellers don't want to drop the price. And that's why it's important, like he's saying, that you definitely want to work with a realtor that's pretty much seasoned and been in the business for some time and really running the comps. Because what you'll see out here, you'll have some sellers actually overprice their property. And next thing you know, you're submitting an offer and you're getting accepted. And you don't want to be the last person by putting all this money down, earnest money deposit, inspections, the appraisals. They don't drop the price, and next thing you know it, you lose out. You got to cancel out of the deal. You start the process all over. Next thing you know, you're mad at that agent. You end up firing him. Then you have to find another agent. That's why it's very important to do all your homework up front and really work with that realtor that understands what's going on with the housing market. Now, did you want to chime in on that?
No, I think it's important, and there's a lot of good agents out there. Chuck's a really good agent. I'm going to say I've been working with Chuck.
I think they know that already.
Well, you just go through the experiences, I mean, yeah, we're making a video and we know each other, but I mean, there's a reason why people gravitate.
Yeah,
you know
that's
what I mean?
right.
It's because they obviously don't want to waste their time. I don't
Yeah.
want to waste my time.
Correct.
I want to have a client or somebody out there that's going to show a property and I know this is a loan and I don't have to worry about, did somebody do something right or wrong? And I'm going to tell you, I've worked with a lot of agents. I've been doing this a long time. He's been doing it a long time. And I think the last thing you want is having a client go through the process and then, like he said, not having the right experience, and then now they can't buy the house because it's $30,000 different. Now you're out looking for another home and everybody's frustrated. Sometimes they sit on the sidelines. His comps are pretty pretty much on point. I mean, I've never really had a comp come back from his side of it that's been a problem. So
now let's go through the process. We already got the property appraised. In the contract on a resale, we have a 25-day loan contingency, which means that you must be fully approved with your lender through the underwriting department. If you pass those timelines, then basically what happens is you basically forfeit everything, and it says that you have to move forward. So the most important thing here is actually turn in all your paperwork that your lender actually needs to actually get the process done, because if you come back and you ask for extension, you definitely will have a problem. Depending on the listing agent and also the seller, they may say no, so you're all in. So that's very important. Time is of the essence, so keep that in mind. So now let's just say we're about to go to the closing stages at this point. Sure. We meet all our contingencies. What happens then as far as now the CD? Let's talk about the CD, the closing disclosures. How does that work? Explain in depth that process. What are the steps?
So the closing disclosure is really the fees that is our final fees that you're going to be charged for all parties. Now, there's some cases they're going to have a final HUD, and the closing disclosure and the title company work together hand in hand to try to get together on the final HUD and the final closing disclosure. Sometimes there's a broker fee. Sometimes there's miscellaneous fees, like, you know, you have just anything could come up. You know, HOA, homeowners association fees, anything that comes up, resale package, whatever it is, they can always revise it. But the closing disclosure is really for you as a consumer to acknowledge these are pretty much the fees that I'm going to be paying. For the most part, it's pretty accurate. Could change a little bit, but it's pretty accurate. And you have to open that up. You have to review that document, and you have a 3-day waiting period to back out. So that once you see that, that's your waiting period of 3 days before you can go to title and sign. So it's very important that you look at that up front. But then during those 3 days, as we're not getting any news, like you're unhappy with any of the fees, title is really working together with our funding department to try to finalize what those numbers are.
And when you're talking about backing out, what do you mean by backing out? Are you talking about backing out of the deal?
Out of the deal altogether. See, these changes happened because they felt like the consumer was maybe, you know, put in a bad place, or they weren't getting the right. They didn't have opportunity to really know what they were getting into. So it's just kind of like what refinances do. You know, you go through a refinance, you have writ of rescission where you have 3 days. They're really saying if there's any adjustments or anything, you have 3 days before you can go and sign a title. And that's to protect you as a consumer. If you feel like the fees are off or it wasn't something that you disclosed, you can go back to the lender and say, hey, you know, we're not going to do this based upon because of these fees being an error of what we thought, or you're just going to have to, you're going to cancel altogether.
Okay, so once the CD has been signed and it has been acknowledged, there's that 3-day grace period.
Correct.
From there, you guys will actually, the lenders will actually send docs over to title. Then we'll set up the time for the consumer to sign and wire over the money.
Yep.
Now let's talk about the signing and all the paperwork. Normally, you're the only lender that I know that always goes down there to meet the consumer. Why do you actually do that, and why is that actually important?
Well, I think the closing disclosure does change sometimes, and I think some of the clients, you know, when you're talking about money, it's sensitive information, right? It's something that everybody's really looking at. That's why everybody's very hesitant about working with the lenders, because you're exposing yourself about who you really are.
Yeah.
And I think when you go down there, you want somebody that's going to represent you and say, okay, let's look at the closing disclosure. Did anything change on that? Because if it changed, and then you can say, Dan, I didn't know about this. Now I'm going to go back to my funder. I'm going to talk to title. I'm going to be like, hey, guys, what is this fee? Because my client didn't know what this fee is, and now we can help you maybe remove it or maybe explain why you're paying for it. Now, it's important for that reason. Secondly, that's the last time I see you as a consumer. So if you're down at the title company and you're saying, you know, Dan was there, he's advising me after everything that's going on with all the paperwork, you're obviously going to leave that a good impression with you, and hopefully we're getting more future business from you and working with you in the future on things.
Let's talk about this. As far as fax funding, what is fax funding, and also does your company do that, and what are the benefits of wiring over the money?
Well, let me talk about that. So there's a couple of things. So one of them, we talked about the underwriting part of it. Yeah. We fax fund is where you just press a button and it's already there at the title company. Now, what a lot of lenders do or companies do is they send the fax and then they wait for a period, like a timeline about when they can actually or release the funds. So you have to meet what's called a wire cutoff. Sometimes it's in the morning, sometimes it's at night. Now, the dynamic of where I work is I'm a very unique situation because I'm a banking institution, but I'm also a a company that's a mortgage division as well. So I have the benefits of being a bank and also the benefits of being a mortgage, mortgage lender. The difference is that I can get the benefits by, I don't wait for a wire cutoff. Once the closing disclosure goes out, once we have the final HUD done, we send it and it's waiting for them at title. So we don't wait for any wire cutoff. We literally just send it to them.
Wow. So that really benefits the consumer.
Absolutely.
So they don't have to sit around and wait. Because if they sit around and wait, what happens if they don't make the cutoff time? It goes to the next day, and you have a closing date that's set today.
Absolutely.
You can put yourself in jeopardy. That's why it's so important to really screen and find the right lenders. Am I correct?
Absolutely. And I'm going to tell you why that's important too with that last part of it is, let's say you're a consumer and you have a seller that's a little bit, kind of on edge. Let's say you get approval with me in 17 days, which is happening quite often.
That's pretty damn quick.
It's pretty quick, and it's because we have so many people in the process. Now, the other thing is, what if you have the wire sitting there, right? You have your money waiting for you. Now you're just waiting on everybody to sign. And now the seller knows, okay, money's there. Everything on the lender side's done. Now it's just, can the seller get their money in? Can everybody bring their money in? And then all parties are met. But if you got the bank doing it way before the seller or even the buyer brings their money in, there's nothing else you can do.
Yeah.
I mean, that's as good as you can get.
Gotcha. Well, that pretty much ends this. Do you have any final thoughts?
No, keep using chakits.
Man, you ain't got to hype me up.
It's my channel. He's a top 250 lender in Las Vegas, Henderson area. So
Lender? I'm not a lender.
I mean, realtor. Realtor.
So check this out, guys. I will actually have Dan's contact information in the link below. So if you guys have any questions regarding like financing, the type of loans, the type of programs out there, I will have a link below in the description. So go ahead and click that link and it will route you to him and just give him a call. Other than that, guys, thank you so much for tuning in. I'm Chakits Krulsawat with Simply Vegas. Have a blessed day. Don't put that in the camera. Some people get so technical on what I say. It's like so crazy. So now it's like you really gotta watch what you say because everything is so analytical nowadays. Hey, this audio better be working, man. It was? Okay. A property for a client that's actually out of state. We're gonna head out to the Ridges and kind of really show you what the Ridges is all about. View a property for a client out in Red Rock Country Club out here in the SUMMERLIN area. All right, so let's get out of here. Oh, what the hell? Hurry up, I'm looking stupid. Ready?
All right, go ahead.
Did you get it?
Yeah.
If you haven't subscribed, go ahead and hit that subscribe button. I'm Chakits Krulsawat with Simply Vegas, and have a blessed day.